Hello, Dr. Vikash. How are you? Welcome back to my channel, and this is Jingru. Today, I'm going to share with you some of my findings and ideas about my final exam topics. All of those topics are very interesting and more challenging to me. So let's get started. I would like to start with my reflective essay, which is about the cash and bank bills trading dealing simulation. In this article, I briefly describe the whole process of our trade dealing simulation and backgrounds, and recalled the overall feeling during the game, and I made a detailed review of the thoughts that occurred to me during the simulation. According to the requirements of the title, I started from the behavioral bias in organizational management and reflect on my behavioral bias during the whole transaction process. For example, I try to use people's anchoring bias to denominate the market interest rate, but also because of my overconfidence on decision making, which caused some mistakes during this simulation. Moreover, I focused on too much on bank sector but ignored the side of corporations, which also caused a negative effect on our trading performance. What I have learned from this simulation is that, firstly, from a neuroscience point of view, due to the cognitive constraints and restricted average financial knowledge levels, even senior managers who are usually highly educated can make wrong decisions, which are caused by overconfidence or personal experience. Secondly, from a marketing point of view, as a banker, we should not only focus on risk controlling or profit increasing for shareholders, but also could better provide customers with good experience from our products and service to increase the total value of our financial products. Financial managers or marketing managers should process from the perspective of customers to meet their needs and approach potential customers through proper channels to achieve a win-win situation. Last but not least, I also recognize that as a trader, we should master professional communication skills. It not only reflects that we are a talkative person, but also reflects that if we are a professional trader, and it could give our customers a very good impression when we are trading. Also, in this essay, I reflect some constraint between my colleagues and me during the dealing simulation and the way how we solve this problem. Finally, I would like to thank Dr. Vikash, who provided us a very good opportunity and platform to practice our financial theories. Here are some references for this essay. Now let's move on to the next question, which is about how debt and equity market affected by the COVID-19. The impact of the pandemic on financial market is huge. Since February 21st, 2020, bond yields, oil and stock prices have decreased sharply, and almost all asset classes with trillions of dollars in market value are seeking hedging. In the United States, 10-year bond yields fall below 0.065%, and stock prices of major global stocks index have decreased significantly. In Australia, 3 years government bond yield falls below 0.5%. It's worth to mention that, according to Dr. Vikash papers with his students, China's banks and fixed-line telecommunications, who would benefit from other sectors through this crisis. In fact, the Chinese government is implementing different incentive policy for high-quality financial technology projects through different subsidies. Moreover, the Shanghai Composite Index has shown a bullish signal for China's stock market since 6th of July, which raised by around 5.7%. In addition, the weighting of the Shanghai Composite Index has shown that the largest percentage comes from the banking industry, which is a further evidence for Dr. Vikash's findings. That is, a large amount of cash flow has poured into the financial institutions during this time period in China, especially the bank sector. In summary, at present, affected by the COVID-19, the performance of debt or equity markets in various countries are unstable, and financial institutions in most countries have potential crises in the long run. Chinese financial institutions are showing bullish signal due to a large amount of capital has been poured in. However, with the further development of the situation, major central banks, regulatory agency, and government may need to take more measures. Alright, let's take a look at my third topic, which is about the current state of environmental and sustainable finance, based on the background of the 2030 Agenda for Sustainable Development, which includes 17 Sustainable Development Goals and Dubai Declaration on Sustainable Finance in 2016. ADGM's goal is to build a sustainable finance hub to support capital formation as well as product creation and distribution to achieve positive economic. In the past, finance was considered unrelated to the environment. However, it turns out that environment regulations and financial markets are closely linked. Now there are already 4 exchanges around the world that specialize in carbon finance transactions, including EU ETS, which is emission trading system in the European Union, and New Zealand in Australia, South Wales Chicago Climate Exchange in the United States, and UK ETS in the United Kingdom. According to the data from the World Bank, the total amount of transactions in the international carbon finance market in 2005 was only $10.5 billion, while by 2009 it had reached almost $115 billion. Well, Abu Dhabi National Oil Company plays a central role not only in developing the UAE economic and sustainable finance, but also in stabilizing international oil trade. Therefore, as an advisor, I highly recommend that corporations like Abu Dhabi National Oil Company could try to follow investment and development strategy to increase their social responsibility and company's value, which could also lead them to meet these 17 Sustainable Development Goals and realize their vision gradually. Firstly, they could try to involve more climate bond or carbon finance. Secondly, they could contribute more money in public welfare dedicated to charity activities, in helping poor people, and contribute to environmental protection, which will help them improve corporate social responsibility. Thirdly, financial managers of ADNOC could also try to focus on the mutual fund of responsible investment. Top management could also develop an internal environmental performance index for their subsidiaries. Last but not least, management could encourage internal R&D technological innovation to reduce pollution from their producing process, which could not only reduce the pollution but can also reduce the cost of operation in the long run. In addition, as Dr. Vikash said in his paper, that environmental and sustainable finance is a relative new field, but environmental regulations affect the corporate management and operation cost, which in turn affect corporate financial performance. The last question I have chosen, which is about whether tournament behavior exists in managed funds? My answer is yes. Many scholars and research have shown that fund ranking is an important basis for fund investors to choose fund products. As earlier as the 1970s, Space pointed out that investors often choose funds based on their previous ranking of the fund. Morningstar has launched and analyzed the rating sector of funds since 2011 and has provided 4 positive pillars for different funds to distinguish which funds are bronze and which are gold. In my essay, several evidence have been provided to prove my answer, which is tournament behavior exists in managed funds. And I also compare the differences between conventional funds and Islamic funds, both from a region basis and a risk basis. I also did some research of this in my essay to answer this question. In summary, there is now a lot of empirical evidence can prove that tournament behavior exists in managed funds in a mature market, which is mainly because that the competition among those countries are very incentive, that fund managers have relative performance targets at the end of the calendar year in order to balance performance at the beginning of the year. They will try to adjust the investment strategies. In particular, those are trends to increase risk in subsequent periods, while winner tries to reduce their risk. Well, I shall stop here and hope you would enjoy it. Thanks for watching. Take care, Dr. Vikash. Bye bye.